More insight on the markets with our first guest in On the Move. Otto Waser is a Chief Investment Officer at R&A Research and Asset Management, and he joins us now from Zurich. Mr. Waser, thank you very much indeed for joining us. Very interesting what Christine Lagarde was saying over the weekend, saying there was a real need for banks to have urgent recapitalisation. Now, that would imply that she thinks there's a major problem here. Lo and behold, what do we have in Europe? Banks up 2.5% today. Perhaps not what you'd expect.
Well, Christine Lagarde clearly has a point, because European banks have not worked so well as US banks, as their US counterparts, in recapitalizing their equity since the financial crisis. So we see that European banks are way much more short of capital in a crisis environment than their US counterparts. So she has a point. I think the reason why banks are up is because the large banks in Greece, Eurobank and Alpha Bank, are merging, and they are merging by recapitalization with money from an external source, from Qatar, without the help of Eurozone governments. And I think that's a positive. So if we get capital and outside interest to help recapitalizing the European banking system, that's positive news.
That's extremely positive news. However, Christine also said that we are about to enter a dangerous phase in the global economy. What is the danger out there as far as you see it? What is the biggest threat?
The danger in the global economy is the fact that since the recession, since the financial crisis of 2008, we have not recovered fully to productive potential. The US economy is still struggling with 9% unemployment, and whenever the global economy grows less than what its potential is, and I think the question whether we are entering recession or not is not the key. The key is, does the US economy grow at 1 to 2% or 2.5% or higher? If it grows at 1 to 2%, unemployment goes up, it goes towards 10%. Sentiment for consumers and businesses are weak, and I think that's the big danger, that we have a re-acceleration of labor market problems, and I think that's the big problem for the global economy. With that slowdown, we see more trouble for banks, again, more problems with non-performing loans, and I think that vicious circle is something that we have to be quite wary of.
Yeah, Ben Bernanke says the Fed does have the tools to use if necessary. I'm wondering what tools are left in that armory, and just how effective could they be?
Well, let's be frank about it. The Fed has done 95% it could do. Interest rates are near zero, and everybody who wants money gets money at near zero, and everybody who has the necessary credit standing gets money at near zero. What they still can do, they can embark on massive further purchases of assets, of US government bonds. They can also prolong the maturity of those government bonds, and I think that's what they're eventually going to decide to do. They could also lower the rate they pay, the currently 0.25% on excess reserves in the banking system, and I think that's something incremental they could do too. But we should not expect too much from any round of further quantitative easing or other steps the Fed can do. Bernanke has said 10 years ago that at the limit they could introduce an inflation target. I think he's been reluctant in the past years to go that far.
Can we also expect anything from Jean-Claude Trichet again this afternoon when he gives a speech? Anything that the markets are really looking for to give them confidence, to give them direction, which is so sadly missing at the moment?
I think the point is exactly that. Central bankers and officials have to calm down markets. They have to create confidence. What he can say is he can repeat what he said over the weekend. There is not a liquidity issue in the banking system. I think he has a point. He is providing all the liquidity the banks need. There is medium-term a recapitalization issue, and I think that can be addressed with outside money. So we expect him to stress again that there is enough liquidity in the system and that there is no immediate danger for the European banking system.
We shall see. Otto Waser, really good to talk to you. Thanks for joining us live from Zurich today.